Okay, Monday 9th of October 2023, we're looking at Asian range break trade. So this is the signal, 6:45. We have a clear green candle, no wicks above it, closing above the Asian range. So, and the higher time frame bias on the dollar is also bullish. So this looks good to go long dollar, which means shorting the crosses. 6:45. Okay, 6:45 puts us here. The problem is price has already moved quite far. So by waiting for that dollar index to give us the signal, we've actually already lost the move here. Okay, and the best place to put your entry is actually a tap back to this Asian range low, which you'll see we never got. Okay, so there would have been no entry triggering here, and it's the exact same thing on the EU. The Aussie is a bit subjective. Okay, so like that 6:45 is here. I mean, if you preempted that and decided to go short, it just would have been a loser. If you're a bit more conservative and you wanted to wait for a clear close below, so this one has a wick on it, so it's not clear. You may have taken it, and in which case you would have lost. Okay, so that's just a losing trade. Nothing wrong with that. The next trade opportunity comes when? So this is the London opening hour. Okay, so what we do here is wait for a 5-minute close above or below, and we get that. We actually get that here, but it no, it doesn't close here because it's green. It's actually closing back inside. And we get this wick, another wick. It's not clear. So the clearest entry, or the clearest signal, is at the close of the 920. Okay, so at 920, what has happened? Price has closed the M5 below its London range, which means we can now flip our bias for this session, just this session, and we can expect price to come and target like one of these smaller, lower time frame liquidity levels. Okay, 920. So we're looking to long pound dollar, euro dollar, something like that at 920. 920 puts us here. Okay, so we haven't broken the top of the GU yet. Okay, so it looks like it is going to go up, and it does go up eventually, but if you're waiting for the 5-minute to close below, you should be waiting for the 5-minute on the GU to close above, and it never did. Okay, so there's no entry yet, and there wouldn't have been any entry, perhaps until later on in the morning or the afternoon. The EU, however, by 9:40, it's already closed above. Okay, it's gone down quite a ways, and it's gone up quite a ways. So this is a potential long entry. So two things. Okay, number one, for confluence, we want to see this here being significant on a higher time frame. Okay, so on a higher time frame, that's this here, right? Price is here. We went long there on the dollar, and price starts to reverse here. So you'll see this is the range. This is yesterday's high-low New York range. This is premium, this is discount. So we're not in a deep premium, but we are above the 50. So 50 is going to be somewhere here. We're definitely in a premium, okay? And this on an M15 is a clear fair value gap. So we can say, yeah, price has gone up. It went into this fair value gap to take liquidity, and now it's plausible that it's going to come down. That's on the dollar. Okay, GU, we said we're not touching it because we never got the close above. We got a wick above, but not the close above. Whereas on the EU, we did have the close above this London range. So we have a reason to be bullish for this session. But we want to see, ideally, price going into a, what they call a PD array. So it's the same thing here. Look, I'm going to fib up Friday's high-low. Okay, and the good thing here, it's actually better than the dollar index, is that we have come into a deep discount, right? That 35, we're in the bottom third, and what you'll notice is just above it we also had the fair value gap. So the fair value gap got closed, we're in a deep discount, we've got the 5-minute close above on the opening range. So now it's just a question of where you want to take your entry. This is also subjective. It's up to you. Some people will take you know, depending on where you want to put your stop loss, you could have had 20 pip stop loss there. It still would have been a great trade. But the easiest one, I think, is just to put your entry at the POC, stop like a few pips below the bottom of that, and it would have been a very simple and easy trade. So let's recap. Number one, our primary signal comes with a close below the opening range during the London session. Okay, so we see that. Number two, this price action up here was going into a premium fair value gap. Number three, we look at our options, and I didn't look at the Aussie, but like the Aussie also would have been an okay, actually this is a good example. So the Aussie would have also been a very good trade, but had you put your entry here at the POC, you wouldn't have got the trade. Okay, so that's the trade-off. You either got to put, you know, more aggressive entries and you get more trades, or you get better entries with tighter stop loss and you will inevitably lose some trades. So in this instance, this turned out to be the best trade. So number three, we got the close above, okay, and then we said that this price action down here was going into a discount fair value gap, and we just simply 15 pip stop and easily 2 to 1.